This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 203 is brought to us by Blueberry Markets. Would you like to have TradingView Premium for 3 months for free? There's a very easy way to do this. Go down below to the show notes and click on the Blueberry promotion going on right now. Not only will you get this for free, you will have a broker that lets you trade everything on MT4 or MT5 or now TradingView, and the world's best customer service on top of that. And the entire process is very easy. Just click the link. It takes you to my website, or a page on my website, I should say, that tells you what you need to do. And that's it. You're locked in. You're good to go. My fellow Americans, please understand this does not apply to you. Do not blame Blueberry Markets. Blame your government. It is the 10-Minute Contrarian Podcast, and I will wager to say that very few of you, after you've seen the title of this episode, had this one on your bingo card. And that's perfectly fine with me. I like to keep people a little off balance if I can. You know, once we start getting too predictable here, then what do we have? But yes, I am putting a new crypto token on my watch list for the first time in a while. And I'm not only going to explain to you why this is the case, but also walk you through how I generally make my choices here. Because as the majority of you know, if you've been with me for any amount of time, or if you have gone to my crypto portfolio, which I do make public, simply go to NoNonsenseForex.com, go to the search bar, type in the word portfolio, and it should pop up right there. My picks have been very, very good. Mostly winners, very, very few losers or laggards. Now, how does somebody who is not a, quote, crypto native person know how to choose these as well as they do? Well, I think it's for that one reason. I'm not a crypto native person. I'm not lost in the sauce all the time. You know, I have 1 foot in the crypto market, 1 foot in the TradFi market, and I have experience. So as much as everybody does have biases in this world, I do feel like because of these factors, I am able to control mine better. And when you do that, you can actually see things for what they are. You know, a lot better than somebody who has made their entire online persona, an online career on maybe not only crypto, but one sector of crypto. Those people are super dangerous. You know, while they may be able to give you good information, their bias usually ends up taking them down one way or another. Not good. But enough tooting my own horn. Please understand, when you have a podcast like this, you do need to qualify yourself sometimes, especially to people who are new. But as a bonus, I will tell you, at least give you a rough outline on how I choose these myself. It's not terribly difficult. It's pretty simple. There is a good amount of research involved, but there is some preliminary factors that I look for first, and I'm going to just give you all of those. So stay tuned for that. I will say that I haven't made too many moves lately because, 1, there hasn't really been a big reason to. 2, I'm pretty happy with the allocation I currently have. I mean, you guys know crypto does really well when it does well, and it becomes a very large part of your overall portfolio sometimes. And this is often the investing gods telling you that you probably need to spread yourself out a bit better. You know, it's not your fault that something that you invested in did really well and went up. But all the same, having yourself spread out is really, really important. So at this point, I usually rotate into other sectors that I like to invest in. And if I do add more money to the crypto space, I'm typically adding on to positions I already like. Because crypto has been around long enough to where we can really see a separation now in companies that look like they're going to be here to stay, which is really important because 99% of companies in this space are not going to. And yes, that includes companies we invest in right now, most likely. So that's really why you have to spread yourself out. But at least we have the information we do now to where we can see this separation happening, and that's good. That's where I want to be. When you have a 99% fail rate and the 1% looks like it's becoming the 1%, well, yeah, that's where I want my money to be. Because as I've stated many times on this show, I think there's already tremendous upside in a lot of these 1%er companies to where I don't need to be taking gambles at this point. And that's why when I have people asking me, hey, VP, what do you think about this token that just came out of nowhere and ended up in the top 100 somehow? Well, one, I'm not going to answer you if you do that. Two, I'm generally negative on it because I've seen this movie many times before. Every once in a while, they do stick, but most of the time they simply don't. And chances are you're falling for it again. So this explains my reasoning behind that. Now, one more thing I want to say is we did have a pump in crypto this week, and as far as the podcast goes, I mean, I'm generally happy when these pumps happen, of course. But as far as the podcast go, I'm like, well, damn it, I really wish I could do what I often do and recommend something when it is very cheap and very unloved and completely out of favor, and everybody's wondering what drugs I'm on, and almost nobody joins in. So then when these things do win and they do pump, as they often do, I don't know, I want all you guys to win too, but I'm not going to lie, it is satisfying. And let us not forget, the last new crypto I have recommended on this show was SWI at 80 cents. And if you don't know where SWI is currently, feel free to go look. So maybe I do know a little something here. Let me go ahead and break down how I choose. The very first thing I do is look for the overall sector and then decide, is this sector in the crypto space, is it inevitable? As in, it's going to be something almost without a doubt, about as close to an inevitability as humanly possible. Or is it a tier down from there? Is it something like highly probable? And then from there, you would have somewhat probable. You can draw your own categories here. A lot of people who came here from my Forex channel to where I said, hey, with this Forex material, do everything to a T exactly the way I say it first, and then after a couple years, you can modify it to your taste. A lot of you guys come over to the investing side of what I talk about and try to follow everything to the absolute letter. That is not the case here. I'm just giving you general guidelines as to how I do things. So that being said, let me give you some examples of sectors within the crypto space which I think are inevitable, starting with actual cryptocurrencies. Now, when normie media says cryptocurrencies, they mean everything. That's not really what it is. Like Ethereum is not a cryptocurrency. It is a blockchain company. Your actual cryptocurrencies, Bitcoin, Litecoin, Monero, Bitcoin Cash, despite what you think of any of those, they are here to stay without a doubt. I don't think I need to talk much more as to why this is. I think it's pretty obvious. And what's also extremely obvious, sorry Bitcoin maxis, you guys are so deep into your religion you can't admit that this is the most obvious thing in the world. Blockchain is here to stay. It is the future of computing and payments and gaming and so many other things. You would have to try so desperately hard to even form an argument against it at this point. And so I've made sure I have spread myself out and invested in several Layer 1 and Layer 2 blockchain companies. We have Ethereum, which is the big one, of course, still the big one. I have Cardano, which is looking to be the most decentralized version of that. I have AVAX, which just keeps growing in all sorts of sectors, but especially gaming, which I really like. SWI, which was the newcomer that I took a chance on. So far, so good. XRP, which is specifically for the banking sector. I like a lot of things XRP does. So that one needed to be in my portfolio. And then I have Polygon as my laggard, because you always got to have one, right? VP, do you still like Polygon? Yes. If I don't like something, I'll tell you I don't like it anymore. Or I'll simply sell off. I'm not afraid to do that. But yes, I think we can all agree here, at least on the 10-Minute Contrarian podcast, that blockchain is inevitable. What else is inevitable? Oracles are inevitable. Blockchain has to get its information from somewhere. It can't do it on its own. So you're going to need an oracle, and I invest heavily in the top one. That's Chainlink, obviously. Web3 gaming. We have spoken about this many times. You can either make money gaming or you can not make money gaming. Those will be your two choices someday, and I think that choice is going to be pretty easy. Does Web2 have the better games right now? Of course they do. They will for a while. But this gap will close, and as we have seen before, you don't even need a fantastic game. You can have a relatively shitty game like Axie Infinity, and the simple possibility of making money as you play it is enough for it and the space overall to do extremely well from an investor standpoint. I do not and cannot see a strong argument against this. I can maybe see a couple of very weak ones. But I really want to take part in this space, and I do through the AVAX blockchain, of course, my investment there, and IMX, which if you guys follow me on Twitter, you know that because I follow my own rules, price came down and hit my break-even stop loss, and so I had to sell it. But believe you me, I will be back in it when it's time. That IMX will be in my portfolio until further notice, and if that notice ever happens, of course, you will know about it. But I could not imagine not having exposure to a space like that. Now, what else is inevitable? Real-world assets, episode 200. Tell me, how exactly could it not be? It is such a superior way to transact everything. And its competition is often 50, 60, 70-year-old technology that is very slow, inefficient, and painful. Come on. Now, the problem with RWAs, like I said, is it's still so early in the game, we don't quite know who is coming to the surface, who is rising to the surface, I should say. But one thing I do know is financial information or information on any asset is going to have to find its way to the blockchain somehow. And how do you do that? By means of an oracle. And at the end of the day, all roads lead to Chainlink. So for now, that is my RWA exposure currently. There's one other sector that I think is inevitable, but I don't have any exposure to yet, and that's going to be AI. I think we all can probably agree that AI is going to be in our future somewhere, probably to a very large degree. My only question is the role blockchain is going to play in it. I just simply don't know. There have been a couple of tokens, remember this, a couple of tokens out of probably hundreds that have actually somewhat solidified their place in the top 100, but I just don't know enough about them, nor do I feel strongly enough about such an early comer's place in this space. I mean, AI, ChatGPT is not that old. And when I saw companies popping up very soon after the genesis of ChatGPT, I was like, this seems really early. I mean, don't get me wrong, we like being early here, of course. But it just seemed a bit hasty, I should say. So this is a good place to recap. I start with the sector, and I try to find inevitabilities. And then within those sectors, I try to find best of breed. I'm telling you, even at this stage of the game, the upside, in my opinion, is still amazing with these higher market cap selections, to where there is absolutely no need to go after a lottery ticket. I'm looking at a tweet right now that just came across in the last 24 hours. It says the poorest 10% of Americans buy 80% of all lottery tickets, and the richest 10% of Americans own 90% of all U.S. stocks. And you know what we already believe here at the 10-Minute Contrarian podcast. Even if you're broke, it is still in your best interest to do what rich people do and never, ever what poor people do. Do not get allured by that one-off guy who might not even be telling the truth, that's telling the world how rich he got off a fart coin, and now he wants to pump his bags even further. You should know how this whole scheme works by now. But one more thing about sectors before I move on to this next one. An example of a sector that I am not very bullish on, at least not in the next 10 years, for Christ's sakes, would be something like decentralized social media. Before, there was a much larger call for this because of all the censorship that was going on. It seems like, thankfully, some of this, or a lot of this, is melting away because now we do have options to where it's not perfect, but at least it's much better than it was getting. And we know through the Twitter files and the YouTube files exactly what was going on and why it was going on. But now that they've been caught, hopefully we're trending in the right direction, and there's a lot less of a need for this. And, we already have it with Nostr, but nobody's really on it. Nobody really wants to be on it because there's really not much of a reason to be on it. And so I just have a really hard time seeing this sector becoming popular and useful and integrated into our daily lives anytime soon, unfortunately. It'd be nice, but this is an example of a sector that I would rank very low. Now, a sector that I would rank as mostly inevitable, but still put it a little bit in the highly probable category, kind of straddling in between those two, would be DeFi. I think DeFi is inevitable just the magnitude of how people use it is the one thing I would have a question on. I'm still pretty positive, but the question is, how soon do we get back to those 2021 levels? It could be a while because a lot of people were in DeFi back then for all the wrong reasons, and those people are gone. Now, the people who are in it for the right reasons have been growing and growing. TVL has been growing. Number of unique daily active wallets has been growing. But if you want to know where this sector is now compared to where it was in 2021, Grok says, at least, that as far as TVL goes, where'd the number go? Okay, historical TVL peaked at 178 billion in November 2021, but dropped to 40 billion, under 40 billion by 2023. The recent climb toward 100 billion suggests growing participation, though it's not yet at the all-time high. So numerically, that is where we are in the space. But it is back on the uptick, and that is a very good thing. And gosh, you got to look at the size of some of these sectors too. Real-world assets, I don't know if there's anything bigger than that. Gaming itself is huge, of course. But DeFi is also extremely big, big enough to where I want more than just a little piece of it. And currently, I have the high end of DeFi, which is going to be Aave. That's the Goldman Sachs. That's where all the rich people want to be. And then I have a more broad scale position with Uniswap, which is not, of course, what it was in popularity because there are other choices now. But I like everything they're doing. They're making it easier. They're going cross-chain. All things which needed to happen. It still has that brand recognition. And I just don't see any reason to get rid of it at this point. But what we've seen is the popularity of not just the high end and the broad scale, but the low end as well. Jupiter on the Solana chain has been extremely popular, has done a very good job at what it was designed to do, now has a lot of brand recognition because of how often it was used. And even if it was used to trade really terrible tokens and projects, it's not Jupiter's fault. Jupiter did a very good job facilitating this for everybody on the chain and has cemented itself as a mainstay on that lower end, which is always going to exist. Now, of course, with not the death, I wish it was the death, but the quote death of meme coins and the meme coin casino, Solana and everything involved with Solana has fallen out of favor, which I thought was great. I thought was sweet divergence in a lot of ways. Again, it's not necessarily Solana's fault. Solana still does what it does, and it does what it does quite well. It gets made fun of for having outages, but the outages have become less and less. And I said back in the SWE episode, how do you find kind of a, quote, slightly more leveraged play on Solana without actually investing in Solana? I thought SWE was that method, and now again, I think Jupiter is that method. I look at the numbers in Asia as well. They have not completely abandoned Binance. They never will. But if you want to talk about DeFi and where it is trending away from Binance and into Solana. Has been for a while. And what we always say here, too, on the podcast, never sleep on Asia. It is huge. They have money, and a lot of money is shifting that way now. And, oh, by the way, one of the things that I like as a TradFi guy is the fact that Jupiter is one of the very few crypto projects out there who is actually making money. They have a positive balance sheet, which you just do not see in the crypto space. We're all speculating on what might be here at the end of the day, which as a TradFi guy is a bit scary. But thankfully, this isn't 1995. We do value things a bit different now because there was one company in the TradFi space in particular that did a great job of not having any earnings for a very long time, yet still managed to maintain the trust of investors until it was time to deliver, and they absolutely did. Does anybody know who this company is? They completely changed the way people value stocks. Like, they don't even look at PE ratios anymore because of what this company was able to do, because of what they were able to deliver. That's your hint. It was Amazon. They prove to the world you don't have to be a, quote, profitable company to be a, quote, profitable company and a great investment. But still, there is part of me that's like, man, I have a lot of exposure in companies that don't make any money and just do nothing but lose money. And I'm sorry, that just doesn't feel great with me at the end of the day. But I still understand the space enough to where it doesn't take me out. But the nice thing is, Jupiter does not apply. Jupiter makes money. They are already successful at what they do. And let's be honest, that's just nice to have. So I get the king of low-end DeFi, which will always exist. Does not seem to have any real competition. There's always going to be some competition, but not any real competition out there. It's on a chain which is due to have a huge bounce back, and it's making money. And it's in a sector that I am quite bullish on. It's not a complete inevitability, but it's about as close as you're going to get without actually being there. And so that's why I'm in. But as the title suggests, it is a watch list company. I am not in yet. I am waiting for a few things to happen on the macro side. And when I do enter, you will know via X. If you don't follow me on X, formerly known as Twitter, you need to do that. There is always a link down below in the show notes for you to do that. And that is the only way you will ever know when I enter and exit these things. One thing I should add is something like this is very difficult to enter on the monthly chart. I typically don't use the monthly chart as much as we talk about it here for crypto positions because they just move too fast. I think there will come a day, and Bitcoin will lead this charge, where it will be prudent and smart to use something like the monthly chart for your entries and maybe even your exits. But I do not think that day has come. I have different criteria as to why I enter my crypto positions. I don't completely share this because I can't sit here and give all of my trade secrets away, for Christ's sakes. I already gave you a ton of my methods in this episode. What else do you want? But Jupiter is now on my watch list. It will likely be a buy at some point, and I wanted to take this time to share it with you. Now, crypto episodes are already rife with spam on YouTube. These episodes do go to YouTube, by the way, and the comment section is always kind of a mess, not just with spam, but with people that come in and want to talk about their crappy coins. I will go ahead and give anybody, you could always do this, I don't care. If you want to go down to the comment section on YouTube and shill whatever coin you like, at least be thoughtful and tell me why. And just know that we have all been conditioned to not take YouTube comments, especially when it comes to investment advice, very seriously. So you can feel free to go do it if you want. But don't expect to be taken too seriously, and don't expect me to give you my thoughts on whatever token you're talking about. I've already given you my thoughts. Some of these tokens I just don't have opinions on at all because I can't be everywhere all the time. But there you go. Now I understand that crypto might be a bit more of a popular place to be now than it was 2 weeks ago, but DeFi certainly isn't. And very few people across the social media space are making episodes like this, but that is fine with me because, as you all know, I have done this many times in the past, and many people, including you, thought I was crazy. When it turned out, I was just early.